Hello everyone, welcome back to my YouTube channel. This is the part 2 of Journal in Accountancy. In my previous video, I was discussing about the meaning of journal, the key takeaways about journal, and then I showed a sample image about a journal. So the journal entry should contain the date, description, debit and credit column, and also it should contain the narration part. And further, I discussed about the types of journal. So there are around 7 types of journal for which I have created individual illustrations in this video. So if you want to know more about the types of journal, please do check out my previous video, right? So in this video, I will be talking about how to construct a journal entry and along with an illustration about all the 7 journal. So it will be a consolidated video about detailed explanation about the types of journal as well as construction of a journal entry, right? Without any further delay, let's get started with the video. The first example here is sales made to Mr. A for rupees 5 lakhs. So here we have to think about one thing, why the name of the customer is mentioned here, because he has purchased from us, right? He has taken the goods from us and he is yet to make the payment. So when a person is yet to make the payment, we are supposed to record his names in the books of accounts, or else we'll not know whether he has actually paid the amount or not. So we are mentioning the debtor's name in our books of accounts. And since we are following double entry system of accounting, you should at least have 2 accounts in the journal, one for the debit side, one for the credit side. So one account I have identified is Mr. A account. The other account is sales, right? So the amount here is also clearly given. It is for rupees 5 lakhs. So let's first construct the journal here. First, date has to be mentioned. Then particulars has to be mentioned. And debit column and credit column has to be given, right? The amount shall come in the debit and credit column, right? So let's assume today's date, 27th 12, right? In the particulars column, we have to mention both the accounts, that is Mr. A and sales. The only confusion that comes here is whether we have to debit or credit Mr. A, whether we have to debit or credit sales, for which we can easily understand this. Since Mr. A is yet to make the payment to us, he is a debtor. Debtor is a current asset. So when the asset is increasing, it has to be debited. So Mr. A account has to be debited. So I'm debiting Mr. A account debit to what happens? Sales account, right? Because your income is increasing, so it has to be credited, right? So Mr. A account debit to sales account. What is the amount? On both the debit and credit column, it has to be 5 lakhs. And we have to give the narration like sales made to Mr. A on credit for rupees 5 lakhs. So this is the journal for this particular transaction, right? Moving on to the next one. The next one is purchased from Mr. B for rupees 4 lakhs. So the amount is clear. Again, we have to identify 2 accounts, right? So first one is Mr. B. The second one is purchases account. We have to identify whether we have to debit or credit Mr. B. Same ways, we have to identify whether we have to debit or credit the purchases account, right? So first we have to analyze who is this Mr. B, right? Mr. B is a supplier, right? So we have taken the goods from him, right? And we are yet to make the payment. So he becomes our creditor. A creditor is our current liability. So when the liability is increasing, Mr. B has to be credited because the liability is increasing. Right? Same ways, purchase is your expense. So expenses has to be debited, right? So let's go on. 27/12 is the date. What should come in the particulars column? Purchases account, because it's an expense, so we are debiting the purchases account debit to Mr. B because he's our creditor. So what is the amount here? 4 lakhs and 4 lakhs on both debit and credit side. What shall be the narration here? Purchases made from Mr. B for rupees 5 lakhs on credit. So I hope both the examples are clear here. One is for credit sale, the other one is for credit purchases, right? Now moving on to the third one. Third one is cash receipts journal, right? So here it is clearly given interest is received for rupees 5,000. Amount is given, right? The amount is given here, and the interest received is one account. So we have identified one account. What is the other account? It is hidden in this transaction. The other account is cash account. Why is it hidden? Because it's not given explicitly. It is just mentioned that interest received rupees 5,000. So it is understood that it's a cash receipt. Okay. So since cash is your debit, right? Because it's a current asset, it is coming in. So we are debiting it because the assets are increasing. So again, let's write the date here, followed by the particulars. We are debiting the cash account because it's the asset and it is increasing. What is the next one? What is the next account? Interest account. Interest is your income, so it is being credited, right? So 5,000 on the debit side, 5,000 on the credit side. We have to give the narration like cash received through interest payments, interest received, right? So, what is the next journal entry? I hope this one is clear. This is for cash receipts journal. Okay. The next one is cash payment journal. Okay. Here it is given paid salaries of rupees 1 lakh. The amount is visible. So, the amount column we should write 1 lakh on both debit and credit. One account that is explicitly given here is salaries. So, we are identifying one account. What is the other account that is hidden? Is again cash account because it was bluntly given like paid salaries to workers for rupees 1 lakhs, right? So 1 lakh is being paid. So it's implied that you are paying it through cash, right? So first you will write the date. Here you have to be very careful because though cash is your asset, it is reducing because the cash is going out of you, right? So the asset is coming down. So what happens? You have to credit the cash account. Cash account should not be debited here because it is a reduction in the assets. Okay, when the assets are reducing, we have to give them a credit. Same way, salary is your expense. So we are debiting it. Salaries account debit to cash account. The amount shall be 1 lakh and 1 lakh on both the columns, right? Here the narration will be paid salary to the workers for rupees 1 lakh by cash, right? I hope it is clear. The third entry is for cash receipt. The fourth one is for the cash payment. Moving on to the next one. Here, 5 and 6 are very important. It is a little bit tricky to understand too, right? So, it talks about purchase return and sales return. So, first, let's understand what is a purchase return. For example, assume you have purchased your supplies from Mr. X for rupees 1 lakh, right? You have purchased goods worth of rupees 1 lakh from Mr. X, right? Now what happens? You're identifying that it is defective. 50,000 worth goods are defective. So you want to return those goods back to Mr. X. So this is called as purchases return. You're returning the goods that you have in your factory back to the suppliers because it is defective, right? So let's construct the journal entry here. You have to be very careful. First comes the date. Date shall be 27/12, right? And in particulars column, we have to enter two accounts, right? So what is the first account here? One is purchases return. Okay. So one account here is purchases return. What is the other account? Either it should be Mr. X or it should be cash. When Mr. X is returning the cash then and there to you for those goods, it will come as cash to purchase return. When Mr. X is yet to make the payment for those returned goods, then Mr. X shall be debited. Okay. I'll just jot it down here. X account debit or cash account debit to purchases return account. One thing you can notice here is when we are making the purchases, we are actually debiting the purchase, right? Because it's a expense, right? Now we are making the ulta entry, right? Because we are reversing it. It is purchases return now. That's why we are crediting the purchase return here, right? What is the value here? It should be 50,000 and 50,000, right? In narration, you can write goods worth rupees 50,000 was returned to Mr. X or on a cash basis, right? When will Mr. X come in the books of accounts? When he is yet to make the payment for the return goods, right? When will cash come? When he is making the payment then and there. He's taking the goods from back from us and he's giving the cash. At that time, you'll mention cash to purchases return. Okay. Moving on to the sales return. Sales return is something your customer has purchased it from you. For example, Mr. B is your customer and he has purchased goods worth rupees 2, right? He has purchased from you. So you are making the sales, right? You have made the sale to Mr. B for rupees 2 lakhs. Later, he's finding out that goods worth rupees 40,000 is defective. So what he will do? Obviously, he'll return it back to us to get the cash from us, right? So think from the perspective of the company. Now you are the company, right? You have sold the goods to Mr. B for rupees 2 lakhs. Now what happens? He is finding a defect, right? For goods worth rupees 40,000. So what he's doing, he's returning those goods back to us. So if we receive those goods again, right? What we have to do? We have to either return back the cash immediately to him or else we'll have to make the payment on a later date, right? So what you will write in the journal entry here, the date shall be 27/12. What is the particulars? Sales return shall be debited. Sales return shall be debited. Why? Because sales is your income. You are crediting it when you're making a sales. When you're getting the sales return from your customer, what happens? The goods are actually entering back into the factory because that person does not like our product. He wants to return it back. So you have to make a reversal entry for the sales that you have already accounted. That's why we are debiting the sales return. And two, it can may either be B account or cash account. You can either make the payment then and there to Mr. B, okay, or else you can make the payment on a later date. So, what will be the amount? Both on the debit and credit side, it shall be 40,000 and 40,000. Again, in the narration, we can write sales return of worth rupees 40,000. Right? I hope both purchase return and sales return is clear. Moving on to the last one, that was general journal. What is a general journal? So far, we have discussed about 6 types of journal. Any transaction that cannot be fitted into those 6 types of journal shall appear in the general journal. It contains every other thing that doesn't come under the above mentioned 6 types of journal, right? So we can have one example here is drawings, drawings of goods by the proprietor Mr. A of rupees 1 lakh, right? So what is happening? The proprietor of the company is actually withdrawing certain goods for his personal use. So it will be considered as a drawings, right? What happens when a person is actually withdrawing certain things from the organization? What happens? First and foremost, you have to debit the drawings account. Why? Because when Mr. A is actually introducing the capital, the liability of the firm increases, right? When he is introducing the capital, the liability of the firm increases. Same way, when he is actually withdrawing from the company, it means the company shall treat him as a asset because he has to give back the goods back to the company, right? Either through cash or he has to give the goods back to the company as such, right? So now Mr. A shall be treated as the asset of the company, right? That is why we are debiting the drawings account. It's like the opposite of capital account, right? Capital account is normally credited because it's the liability of the company. Drawings is the asset of the company, because that proprietor now has to return back that particular good, right? So drawings account debit to A account. Okay, because when he is introducing the capital, we are increasing the liability of the firm. Now he is withdrawing from his company. Now it is his liability and the asset for the company, right? So we have to write the date and what is the particulars here? Drawings account debit to A account, right? Now the amount here will be 1 lakh on the debit side, 1 lakh on the credit side. In narration, we can write withdrawn goods worth rupees 1 lakh by the proprietor. Like this, we can construct the journal entry. I hope the entire video speaks clearly to you about the types of journal entry and how we can actually construct a journal. And I hope it was very useful for all the accounting students here. Thank you so much for watching my video and do subscribe for more videos. Thank you.